Thank you for choosing to watch this video about the stocks that legendary investors are buying. For more videos on the best stocks to buy, please press the like button and subscribe. With that being said, let's dive straight into today's story. As we approach the conclusion of 2023, a year marked by significant fluctuations for investors, it is noteworthy to reflect on the unexpected twists that transpired. At the onset of the year, analysts were projecting a pessimistic outlook, citing concerns about global economic stability and geopolitical tensions. However, the surge in AI-driven momentum provided a substantial boost to major technology stocks, which boosted the stock market considerably, which allowed it to sustain its value. Looking forward, numerous analysts anticipate a potential conclusion to the euphoria that buoyed the markets throughout 2023. BNP Paribas analysts, in their comprehensive 2024 Outlook report, suggest that the catalysts propelling the stock market in 2023 may lose momentum in the coming year as consumer savings dwindle. Factors such as rising interest rates, inflationary pressures, and supply chain disruptions are also cited as potential challenges that could dampen market sentiment. Daniel Morris, chief market strategist at BNP Paribas, expresses the view that the recession, initially anticipated in 2023, has been delayed but not canceled. In contrast, the 2024 Outlook report from UBS adopts a more optimistic stance. Mark Hafel, who is the chief investment officer at UBS, envisions a slowdown in growth but emphasizes the absence of a recession, pointing to positive indicators such as strong corporate earnings and a potential resolution to global trade disputes. The report also highlights emerging opportunities in sectors such as renewable energy, healthcare innovation, and emerging markets. Now let us shift our focus to investments that legendary investor Warren Buffett and investor celebrity Jim Cramer are buying. Warren Buffett's recent portfolio reveals a substantial $936 million stake in Snowflake, ticker name Snow, which is a company praised by Jim Cramer. This praise is due to their effective utilization of AI and notable quarterly performance. Buffett's investment in Snowflake reflects a broader trend of traditional investors embracing technology-driven companies, which signals a shift in investment preferences. Cramer and Buffett also express bullish sentiments towards Amazon.com, which has the ticker symbol AMZN. The reason for the positive sentiment is due to its positive impact on consumers, despite facing a lawsuit which was filed by the FTC, which alleged that Amazon has unfair business practices. Warren Buffett's hedge fund holds a significant $1.3 billion stake in Amazon, indicating confidence in the e-commerce giant's long-term prospects. The ongoing legal challenges faced by Amazon are closely monitored by investors, as regulatory scrutiny on tech companies continues to shape market dynamics. Now we will talk about financial technology companies where Cramer favors MasterCard Incorporated Overblock, a sentiment echoed by Warren Buffett's ownership of a $1.6 billion stake in MasterCard Incorporated ticker symbol MA. Positive performance in payments is highlighted in Baron FinTech Fund's Q3 2023 investor letter, emphasizing the resilience of established payment networks amid evolving digital trends. The fintech sector's continued growth and innovation remain key factors influencing investment decisions. Furthermore, Warren Buffett recommends Visa, ticker symbol V, over a company like Block, representing the new fintech era. Berkshire Hathaway holds a substantial $1.91 billion stake in Visa as of the end of the September quarter, with Ensemble Capital Management emphasizing the widespread acceptance of MasterCard and Visa globally. Overall, the competition and collaboration within the fintech space, driven by advancements in digital payments and blockchain technology, add a layer of complexity to the investment landscape. You should also know that Cramer identified Kroger, ticker symbol KR, as a resilient safety stock capable of withstanding inflationary challenges. He commended Kroger's digital investments and partnerships, including those with Starbucks, Instacart, and DoorDash. Investors closely monitor Kroger amid its $25 billion acquisition deal with Albertsons, pending final clearance from U.S. authorities. As of the end of the third quarter of 2023, Warren Buffett held a substantial $2.24 billion stake in Kroger, underscoring the importance of this investment. The regulatory considerations surrounding the acquisition also introduce an element of risk and anticipation among investors, reflecting broader trends in the retail and grocery industry. Investors should also be aware that Jim Cramer astutely observed that oil stocks were unlikely to replicate the robust performance that we saw in the previous year. However, he identified Chevron Corporation, ticker symbol CVX, as a strategic choice within the oil industry. Cramer emphasized that, given certain conditions, particularly if oil prices remained above $60 per barrel, selectively investing in the oil sector could make sense. He did, however, caution that the Federal Reserve's persistent rate hikes had the potential to decelerate the economy, which would impact oil stocks. Notably, Warren Buffett's Berkshire Hathaway has a substantial stake in Chevron Corporation, amounting to a massive $18.6 billion as of the end of the third quarter of 2023. This significant investment by Berkshire reflects Buffett's confidence in Chevron as a key player in the energy sector. But let's talk more about Warren Buffett, who is the CEO of Berkshire Hathaway. Buffett commands considerable attention from investors when he imparts insights on stocks or the U.S. economy. This attention is well-deserved given Buffett's remarkable investment track record. Since assuming the role of CEO in the mid-1960s, Buffett has led Berkshire Hathaway's shares to an impressive annualized return of 19.8%. Buffett's and Berkshire Hathaway's success lies in no secret formula. Buffett and his right-hand man, Charlie Munger, openly share the qualities they seek in businesses and management teams, which often result in successful investments. During Berkshire's annual shareholder meeting in May, Buffett went so far as to refer to tech giant Apple, ticker symbol AAPL, as a better business than any we own. Despite Berkshire Hathaway's ownership of assets like the railroad company BNSF, leading insurer Geico, and equity positions like Procter & Gamble, Buffett views Apple as the pinnacle of business excellence. Reports from 2021 indicate that around 90% of iPhone buyers tend to stick with the brand for their subsequent purchases, showcasing unparalleled customer loyalty. Moreover, Apple's commitment to innovation, led by CEO Tim Cook, extends beyond its iconic devices. The company is strategically transitioning towards subscription services, diversifying its offerings while maintaining customer loyalty. Apple's capital return program, highlighted by over $600 billion in stock buybacks since 2013, further solidifies its appeal to Buffett. These buybacks progressively increase Berkshire's ownership stake in Apple. Now let's talk about Berkshire Hathaway's investment in Bank of America, ticker symbol BAC, which underscores Buffett's affinity for the financial sector. Financials, particularly bank stocks, are Buffett's preferred sector for deploying Berkshire's capital. Despite the cyclical nature of banks, Buffett appreciates their ability to grow loan portfolios during economic expansions. Bank of America, in particular, benefits from being the most interest-sensitive among major banks. The Federal Reserve's recent rate hiking cycle has notably favored Bank of America, aligning with Buffett's investment strategy. Bank of America's success is further attributed to its technology investments, promoting digitization and reducing expenses through online banking. Trading below book value and offering a yield above 3%, Bank of America represents a value play consistent with Buffett's investment principles. Next, we should talk about credit services provider American Express, ticker symbol AXP, which holds a prominent position in Berkshire Hathaway's portfolio, constituting almost 7% of invested assets. American Express thrives during prolonged economic expansions, capitalizing on its dual role as a credit card network and lender. Its ability to collect fees from merchants and generate income from cardholders contributes to its profitability. Moreover, American Express attracts high-earning clientele, which ensures stability during economic downturns. Buffett's long-term success with American Express is evident in the impressive 28.3% annual yield relative to Berkshire's cost basis. This highlights both the stock's performance and the income generated from its position. Up next we have Coca-Cola, ticker symbol KO, which is a beverage giant that holds the distinction of being Buffett's longest continuously held stock, dating back to 1988. As a consumer staples stock, Coca-Cola provides products that consumers purchase consistently, irrespective of economic conditions. This inherent demand ensures highly predictable operating cash flow. Coca-Cola's brand awareness, as the most valuable food and beverage brand globally, coupled with its extensive geographic diversity, contributes to its stability. With operations in almost every country, Coca-Cola taps into developed markets for consistent cash flow and embraces emerging markets for organic growth. In addition to its robust business fundamentals, Coca-Cola's status as an income juggernaut is evident in its 61 consecutive years of increasing its base annual dividend. Berkshire Hathaway benefits from this income stream, with a nearly 57% annual yield relative to its low-cost basis in Coca-Cola. Collectively, these four stocks, Apple, Bank of America, American Express, and Coca-Cola, comprise 71% of the $357 billion portfolio overseen by Warren Buffett at Berkshire Hathaway. Each stock reflects Buffett's strategic principles, emphasizing predictability, customer loyalty, innovation, and a commitment to long-term value. Thank you for watching all the way until the end of the video. If you want more videos on the best stocks to buy right now, please press the like button and subscribe. With that being said, I wish you the best of luck and happy investing.